What is going on, everybody? Welcome back to another video. It is April 23rd and we are recovering, thankfully. But with that being said, in today's video I really want to go over how I'm going to manage my portfolios going forward after a really pretty much a horrible couple of weeks. So with that being said, let's go ahead, jump right into this video, and I'll see you in the intro.
I know I'm fine, but the money
Okay,
makes
guys, it's been bad. We're not gonna lie. The past couple of weeks have been awful. So what happened on Thursday night as I was trying to catch a plane? I'm not gonna. This is a double-edged sword here. Obviously, the MES or the S&P 500 sold off pretty bad that night. And I was down here when I was getting off of a plane in order to reboard the plane because the plane had problems. And I was at my 200% stop loss on basically my short puts. Basically meaning I was selling puts on the MES, which you guys should just go back to the other video and see where I had them all. There was lines down here where if it would have went to, I would have bought. Now, in retrospect, now that it's all done, I would probably be flat or in the profit after these two big green days. I didn't want to hold through that. My rules are say 200% because just as easily as it has went up, it could have went down. So that is where this little portfolio is. We're roughly at about $15,000 right now. I think we're just under like 14.9. We're getting pretty close. That did happen, but I just kind of want to show you guys something where the only thing different here is, so I'm starting it with $14,000 on this, meaning I have $900 to go, which is about one MES contract worth of capital that I can use. So, and unwanted capital, when I'm not reinvesting the dividend, will go into bill, or I will buy T-bills or whatever in this. So you guys can see I am benchmarking this off of the S&P 500. And I just want to show you what I'm putting in these. So you guys know I like PTY, the stock. You guys can either hate it, not hate it, whatever. I've owned this stock. I think my average price is in the low 12s. So I like this stock because it pays me every single month. And it's been great for me. Even if it cuts its dividend a little bit, which it did back in COVID by about a penny, I'm still okay because I'm still making money on it and I'm still profitable overall. Now, do I have like a mental thing basically saying, hey, if it comes back down to my average, do I buy more or whatever? That'll be circumstantial. So, but PTY, you guys can see I did one portfolio. I have O Realty, which pays monthly as well. It's just at a discount right now, and I do like it. And again, this isn't 100% what I'm doing. This will change based off of market conditions. If O gets expensive, I won't continue to buy it. But I do have a few shares. I think I have like 4 or 5 of O in this one just to hold on to it for right now. And I'm going to continue to buy a little bit every single week. Southern Company, which is a utility company. Like Georgia, South Carolina, North Carolina, things like that. They do some natural gas, all of that. They provide energy. And then Oxy Petroleum, which is a Warren Buffett investment. They're also big here in Houston, where I currently do live. And you guys can see I've changed the percentages up on this. This third portfolio is only PTY and O, which is why it's named income. So I already did this analyze tab here, and I just want to show you what it looks like. The green line is the S&P 500, which isn't bad whatsoever. It made money. That is the most important thing here. And another thing you guys are going to see is I didn't add any more money into it. So I could obviously change this to contribute fixed income and say $400 or $500 a month based off of what the average person puts in their 401k every week. I didn't do that for this purpose though in this video. And again, I'm not selling any options. I think for the end of this week is really what I'm looking for. I want to get through some of these earnings plays here and see how we react, because 2 days is nothing. If we get through a week and we're about balancing back out without having another just catastrophic week, then we'll look at selling those MES options again. But again, and you guys know I only sell on red days, 2 green days. There's no reason for me to put another one back in. So again, back to this portfolio and how I'm kind of structuring it, giving you guys kind of a base. You guys will see the portfolio income is the big difference here. So with doing nothing, I'm going to make $1,300. Making nothing. But as you go, you guys can see it does get better. You guys can actually see the income and growth fund actually does outperform a little bit of the dividends. Now, as you can see, we're getting here this year, we're pretty much flat. The actual income and growth stocks actually are, because you got to remember Oxy and Southern Company also pay dividends and they have a better growth rate. So that's what you get those, and you guys can kind of see it here. Income and growth, the red one and the blue one, the 25, 25, 25, are actually right there, and the strictly just income one is just slightly underneath of that. Now, I want to show you guys the differences here. So if I do the contribute fixed income and I do it 400, and no, we don't want to do it contribution. We're going to do this monthly. Again, this is $400 a month, $100 a week. You're going to see a difference, I got a feeling here. Yeah, you're going to see how it gets much, much tighter. And this is really the big difference and the big point of dollar cost averaging in. Now, again, you're going to see there's going to be some discrepancies here. Yep, as you can see, the actual income does get better portfolio income. And now you can see it here, after about 15 years, you're making $23,000. That's pretty solid. If you ask me, I mean, that's pretty freaking solid. And then you just get better and better and better and better. And you're almost up to $40,000. Now, again, I think you can exponentially grow this by adding more every single month. Now, here's what I do, and this is the trick and why I've been able to outperform the market a lot better than other people. And it's a very simple trick, and it's something that I think is very, very important, is what I do with my capital is, again, I'm not using a lot. I'm using, say, a grant. What my plan is for about $1,000. I'm going to use it on the MES, and I will use the option, the income that I get from the options. I will go back and buy whatever stock in my portfolio that I'm looking at. So out of those 4 or 5 stocks, I'm going to go buy the cheapest one at that time, evaluation wise. I want to go see, maybe PTY's on a dip, maybe O's on a dip, maybe I can get some more income in there. Maybe Oxy Oil had a bad week or a bad month, I can get them on a dip. And that's how I'm able to continue to grow equity in my account as well as being able to grow income. And again, you have to be able to have both. And I think that's something that a lot of people overlooked, like, oh, I'm only going to sell options, oh, I'm only going to do this, oh, I'm only going to do income stocks. I get all of it, but the best combination I've found in all my portfolios, the smaller portfolio, my bigger portfolios, is being able to find the balance. Literally, I don't take any money out of them normally. I take the income from the options that I'm selling, and then I just continue to buy shares with them. And then now, I will say I don't have my DRIP on, my dividend reinvestment plan on. I literally have it where it sets in the account, and then I will go buy the stocks that are cheaper at the discount. And that's been my plan for years now, guys. I absolutely love it. I don't even have to deposit money anymore if I don't want to. I do, because I want that to continue to grow in my account. And it's absolutely great to have that safety net. Even if the market does take a haircut, I'm buying it because it's on a discount. So that is the plans for this small portfolio. I want to take you guys through this. I got to get rid of this line. I didn't realize it was on here. This one would have killed me. So the bonds trade that I was talking about a couple weeks ago, you guys got to realize it only had to get to here, and this would have been multiple thousands of dollars of a loss on this account. But I cut it. Again, my rule on selling options is, especially if I'm selling just a naked option, is 2 times the credit collected. That's my loss. So if I collect $100, $200 loss, I cut it and I move on. I can come back from a $200 loss. I can't come back from a $15,000 loss on a $15,000 account. Stay alive, stay moving. Bad trades do happen, or not. They're not even technically bad trades, but remember, law of large numbers. It will get you further. That is really my trade plan in these accounts. Again, I like to have the equity and be able to grow my income as well all at the same time, guys. So again, I appreciate you guys all for watching this video. Remember to have a balanced account. Just don't be a one-trick pony. It will get you hurt in the end, especially if you were only selling options completely. In this market, you just took if you had them all, if your capital that was put in here was say at 100%, you just had a giant haircut on your thing. But say if you had it at a 50%, you probably still took a 25% haircut on your account. So with that being said, guys, thank you guys all for watching this video, and I will see you guys in the next one.